Assalamu alaikum. Hi guys, this is me Irfan Haider and you are watching my YouTube channel Irfan Haider Gilani. First of all, I welcome back to my YouTube channel. Today the topic about the tax history which we left yesterday. Yesterday we have seen about the government source of income, government expenditure, and what is the tax, what are the tax amnesties, and how many tax amnesties government have been issued till now 2023, and any other terms regarding the tax administration policies. Today we are going to start the tax history from 1862 Income Tax Ordinance 2001, which is currently now implement and continue. So let's begin the topic. First of all, the tax history of the subcontinent India, Pakistan and Bangladesh. Subcontinent means these three regions include in this. So what in undivided India, now consisting of Pakistan, Bangladesh and India, income tax was introduced for the first time in the year 1860. Okay, this is the very important question, that first time income tax introduced in 1860. It was introduced by the Income Tax Act 1860 and the name through which the tax implement, that is Income Tax Act 1860. And exactly the same pattern as followed that was prevailing in those days in the United Kingdom. As we know, British ruled on the subcontinent last of decade, so they implement same pattern which they used in their country, in the United Kingdom, UK. And now what is the Income Tax Ordinance? Income Tax Ordinance 2001, which is the base of this British Income Tax Act 1860. So this act came into the force in 31st July 1860 and continued for the only 5 years, and up to 1st August 1865 when it was completely withdrawn. So first tax law implement in 1860 and till 5 year they work, and 1865 it will withdrawn. It had withdrawn. The major characteristic of this act was that the agriculture income from the land above the rental value of the 600 per annum was taxable. So in this Income Tax Ordinance 2001, agriculture income is exempt from the tax, although the agriculture income tax is the domain of provincial government. Provincial government collect the tax from the landholder on the agriculture income. However, Federal Board of Revenue doesn't collect any type of tax on the agriculture income. If someone taxpayer shows that I have this income as an agriculture income, then taxpayer must show the tax which he paid to the provincial government to defend his statement that this income is related to the agriculture income. Otherwise, they have no proof to, they have no any evidence except the tax receipts, tax payment receipts to prove that this is the agriculture income. So if someone want to take the exemption of an income, he must pay the agriculture income to its province, then he can take the exemption on that amount which is which he wants to take the exemption from the income tax. So that's the main point in the 1860. Now what is the next law? Let's see. As in the previous video, I told to you that the first Income Tax Act which is implemented in the Pakistan and prepared by the Pakistan, that is Income Tax Ordinance 1979. What about the previous years 1979? Is there no any law income tax which collect Pakistan tax? No, Pakistan has a tax ordinance, tax laws. Next I will tell you what was the law when Pakistan came into being. The Income Tax Ordinance 1979 was promulgated through the Finance Ordinance on June 28, 1979 and came into force on the 1st July of the same year, and it continued to prevail the country for 22 years. So this is the big achievement of this ordinance, that it continues up to the 22 years. And after that, Income Tax Act, it adopt all the basic concept of the repealed Income Tax Act 1922. It lasted for 57 years. So before 1979, the tax which is implemented, the tax law which implement in the country, that is Income Tax Act 1922. And before that, I will show you era without any tax law. During the journey of the tax formation, tax implementation, tax formation, there have some era which have no tax law. People doesn't pay in this era any tax. They did not follow any income tax law in these eras. So first era is that income tax was not applicable for the next 2 years in between 1865 to 1867. It may be asked from the candidate that what was the era in which no income tax law on this subcontinent, not in Pakistan but on the subcontinent, that is 1865 to 1867. So it becomes the 2 years. Then is there any other era? Yes, there is any other era. Income tax was entirely withdrawn for the second time in 1873. The gap period was again, that is 4 years. Okay, there are 2 eras which have no income tax law. Okay, next. So first start income tax 1860. It lasts up to 1865. It means 5 years. On 1865, tax withdrawn for 2 years. Then the 1867 come. In 1867, the License Tax Act was introduced, or you can say replaced the Tax Act 1860. What are the characteristics of the License Act? The income earned up to the 200 rupees per annum was not taxable under this law. Only income. The income is not respect to the individual income, company income, association income, or any other income. Only the person who earned the total income of 200 rupees exempt. If he earned more income, then he should pay the tax. Amounts earned above this limit were taxable at the rate of 2%. On that time, 2%, it may be the so much amount, and 200 rupees per annum, it would be the lots of amount, like 2 million rupees in this time. In this act, agriculture income was exempt from the tax. So again, agriculture income get the status of exemption from the tax in the License Tax Act. So again, 1868, after the 1 year, the License Act replaced with the Certificate Act 1868. So what are the characteristics of the Certificate Act? In the 1868, the License Act of the 1867 had been changed to the Certificate Act 1868. So you have to make the complete map in your mind from 1862 onward. First of all, 1860 is the first tax law in the subcontinent. Then it lasts up to the 1865 for the 4 years, and then it withdrawn from the country. There was no law between the 1860 to 1865 to 1867. Then in 1867, the License Act was introduced, and it lasts up to the 1 year. Then again, 1867 Act replaced with the Certificate Act, that in 1868. Now, What are the characteristics? The 1868 License Act was replaced by the 17. Okay, now by virtue of this act, not only that the exemption limit was raised to rupees 500, but the rate of tax was reduced to 1.6%. So this is the great achievement for the 1868 Act, that income increased and the tax reduced. It is just same like as today, that today's income tax exemption, that is equal to 0.6 million. If any individual, any salaried person earn annual income up to 0.6 million, he has not to suppose pay any tax. So if he listen that income tax introduced, and now the slab rate increased from 0.6 million to 1 million, then it will become happy that I have gained a lots of tax exemption. So this is the main point in the 1868. But what after that? That is 1869 Income Tax Act 2. What are the characteristics? In the 1869, the Certificate Act was converted again into the Income Tax Act 2. So I think they correlate, they mention name Income Tax Act, whichever tax they make, they wanted to take the name income tax in every tax. Under this law, the agriculture income was again brought into the taxation, because at that time, because the only main source of income, that was the land. No, there are lots of the business, no, lots of the salaried person. The main source of income and revenue generated, that was the land. They cultivated land and give taxes to the British government to protect and to for so many other things. This act name remained for the force for only 1 year, and during the next 4 years, tax was levied by annual legislation. Okay, what did he says? He says that Income Tax Act 2 1869 remains implemented only for 1 year, and after that the annual legislation decide the amount of tax and rate of tax. You can say amount of tax and rate of tax is decided by annual legislation after the Income Tax Act 2 repealed in 1869. Repealed means removed, avoged. Tax was levied annual legislation. By 1872, the exemption limit was gradually raised to rupees 100. The first tax limit was 200 rupees. Then the second limit was 500 rupees, and in 1872 it comes up to 1000 rupees. Now what is the next tax law? Let us see. The License Act. Again, License Act introduced in 1877. After a gap of 4 years, it was reimposed and termed as the License Act. Remember that these 4 years are the tax implemented, not the gap mean there was no tax law. Although there is no tax law implement, but annual legislation is itself a tax implement in the country. In this law, a tax on trade and cess on land was proposed. Cess mean, you can say the rent of the land, you can say ushur, and like this. Income Tax Act 1886. Now this is the turning point in the income tax history, because it lasts more than 1, 2, 3 or 4 years, because we have seen that previous tax laws remains only 2 year, 3 year, 1 year, 4 year, but 1886 Act remains more than these time periods. A new Income Tax Act was which came into force in 1886. A proper definition of agricultural income was provided for the first time, and such income was completely exempt from the tax. Now in 1886, again agriculture income exempt from the tax. Not only exempt from the tax, but 1886 Act defines what income relate to the agricultural income. And what type of the income basically relate to the agriculture income? Concession in payment of tax was provided if a person paid life insurance premium. So the first time they give the credit for those taxpayers who pays the tax insurance premium for their life and so any other person. The main motive, the basic motive of the government to give the credit for those person who pays insurance premium is that people promotes saving mode. They save money and for their better investment. This was done in order to encourage the people to save money and invest it properly. Okay. The next characteristics is that schedules explaining the source of income and rates of tax was for the first time attached to the act separately. These schedules continued for 30 years. Schedules mean slab rates. If anyone fall in this slab rate, he will pay this amount of tax. If anyone's income falls another slab rate, he will supposed to pay this amount of tax. So this is the schedules mean. Schedule not only for individuals, schedule only for agricultural income, for companies income, and so any other schedules like that. Now we have how many schedules in the Income Tax Ordinance 2001. You must comment in my this video to tell me that how many income tax schedules are now implemented and how many exempts. So this is your assignment to tell me in my comment box. Income Tax Act 1886 itself continue up to 1918. Okay, that's the big era. 30 years, long time. And during its life of 32 years, only one major amendment was made in it in the year 1903. Okay, that's a good achievement of this law. It's mean this law covers a lots of points, lots of concepts which do not need to be changed for up to 30 years. Only one amendment has been introduced in this act, which was on 1903. Sorry. The next. So you have to make the complete map from 1862 to 2001. That's on up to you, that how you remember this concept, this journey, because this is the very beautiful journey from 1862 to 2001. Now next tax is Income Tax Act 1918. Another important landmark in the taxation history of the subcontinent came about in the year 1918. The Income Tax Act 1886 was replaced by the Income Tax Act 1918. Okay. The act for the first time introduced a distinction between total income and taxable income. So it is another important concept which you must be remember before you go for your interview, that when the total income and the taxable income introduced in the tax history or in which tax law this terms introduced. So this is basically 1918 Act, which defines what is the taxable income and what is the total income. The difference between the total income and the taxable income is that a person earn the amount is the total income, and when they reduce this amount from the allowable deductions, then we come to the taxable income. So tax implement only on the taxable income, not on the total income. Before the Income Tax Act 1918, the tax collected on the total income. No one is allowed any deduction from their total incomes. they pay the tax only on the total income. So this is the main difference between previous laws and the 1918. We continue. Under the previous acts, income of the same year was taxed immediately. But in this act, tax was imposed in the respect of the income and earned during the previous income years. So this is another major difference between previous laws and this law. Due to above mentioned reason, the question of amendment changes in the law was first considered by the Provincial Committee, and then All India Committee was formed in 1921. The purpose of this committee was to revise the whole law regarding income tax, and on the report of this committee, Act 1922 was introduced. Okay, so in 1918 this concept arise that if you want to change anything, you comes up with the Finance Act, not to change the law itself, but you can change some minors by the Finance Act or on the recommendation of the committee. So now Income Tax Act 1922. What are the characteristics of Income Tax Act 1922? The Income Tax Act 1922 prescribed a complete machinery and procedure of the assessment. Matlab, after the long amendments, the Income Tax Act 1922 came into the being and it has a complete machinery. It provided that rates of tax will be fixed every year by the Finance Act. And now what is the Finance Act? As I have already told you, in annual budget, the Finance Minister present the summary to the Senate, to the Parliament, that we need to be change in these sectors like tax change, tax rate change, or exemptions change, or any other monetary change. If Finance Minister requires a monetary change, then this act is known as the Finance Act, and it presents separately or some portion from this budget. The purpose of this committee was to investigate the law completely from all possible angles. The committee was asked to give a report about that what type of changes we need to do in this current act. Same like that today, you know very well how budget is prepared and how budget passed in the Senate, in the Parliament. This Finance Act is also same that. The Tax Ordinance 1979. The ordinance replaced the Income Tax Act 1922 and was enforced as from 1st July 1979. So these two laws are very important, which can be asked from you into your interview, because in this time period Pakistan came into being. When Pakistan came into being, that is 1947, and at that time Pakistan is not in the position to make its legislation, its law. So they decided to implement the law which already implemented in the subcontinent. So that was the 1922 Act. So they continue this act, and they itself research that what type of the changes need to be done in the future in this act, and at 1979 they finally decided we have changed the Income Tax Act 1922 with the 1979. So because we have lots of information, lots of reasons to replace this tax from 1979, because is in these era they have collected lots of information. So I am repeating this word. Wow, that's the big change. That's very important term. What is self-assessment scheme? Because it was introduced first time in the Pakistan history, that through the Income Tax Ordinance 1979. So you must be aware and you must be a clear concept about the self-assessment scheme. So let me tell you what does it mean. Before the 1979, taxpayer has no right to assess themselves that I earn this income and tax is that, so you please take your tax and come back home. There is no right to the taxpayer of this facility. But upon the introduction of this self-assessment scheme, taxpayer has a right to assess themselves and pay tax to the government. The government afterward check your return, your assessed tax. If found any discrepancy, they can call you and they can tell you to pay additional tax if found any discrepancy. If not found, then well, you are free from your tax liability. So this is the main concept of the self-assessment scheme, which was introduced first time in the history of Pakistan, that is 1979. So what will be the next income tax? That is Income Tax Ordinance 2001. So the ending time of comes of Income Tax Ordinance 1979 and the starting time of new tax, that is Income Tax Ordinance 2001, which is still now continue. In 1985, the government set up a National Tax Reform Commission to suggest ways and means to improve the existing tax structure in the country. As a result of all these efforts, the Income Tax Ordinance 2001 is in force in the Pakistan now. And you very well aware about the Income Tax Ordinance 2001. I don't want to tell anything about this tax. If you want to tell anything, you have a confusion about the Income Tax Ordinance 2001, and you can tell me in the comment. If I have a knowledge about that point question, then I definitely reply. The new law has abolished the role of assessing officer. This is also the turning point, and this turning point relates to the self-assessment scheme which I told you previously. It is definitely, if taxpayer assess themselves, then it is fine, it's okay. Tax officer do not need to again assess the taxpayer. So it means tax officer has no power to assess the taxpayer. No, tax officer has the power to reassess the taxpayers. So this is basically mean the reassessments. On reassessment, I already have a video on my YouTube channel from section 122, I think section 124, which relates to the reassessment of the taxpayer. If you don't have a concept of assessment and their types, you can watch this video which I give in my description. So the next point is that the next CBR to FBR journey. Before FBR, there is a CBR in the Pakistan. CBR stand for Central Board of Revenue. The Central Board of Revenue is replaced with the Federal Board of Revenue on the recommendation of Federal Board of Revenue Act 2007. Now, what does it mean? Its characteristics of the Federal Board of Revenue Act. The FBR Act 2007 has empowered the tax official to formulate policy for performance management, awards, incentive packages, golden handshake schemes, and integrated management policy for the tax machinery. In the previous video, I told to you about the restructuring of the FBR, that the restructuring of the FBR is going to be under process. What is the reason behind that tax restructuring, FBR restructuring? The reason, the finance minister wants to take the tax reform policy from powers from the FBR. So if the tax reform policy gone from the FBR, then FBR will not in the position to make these type of decisions, to hire someone, to release someone, to transfer posting, maybe the FBR's order, but not hiring. This is the main point. So let's talk about that. Leave it on this video. The official to formulate policy for performance management, awards, and golden handshake are the all are the mentioned in Federal Board of Revenue Act 2007. Now, federal minister, these are the two main another concept, and after that video has been completed. Federal minister constitute committees. There are basically two committees: Tax Reform Commission, that is formed in September 2014, and BTB, broadening the taxpayer committee, in May 2015. What are these responsibilities? We will see in the next that what are the responsibilities and key operations of these two committees. First of all, we will see the broadening taxpayer. The objective of committee is that review rationalization of direct and indirect taxes with a view to broadening the net. So basically the main agenda, the main task of this committee is to introduce new taxpayers, to approach the new taxpayers which required to be registered under the Income Tax Ordinance, but they don't have NTN, they don't have any tax filing. So this is the main agenda of the BTB committee, to approach the new taxpayers, to amend and discuss new tax laws. So these are the main limited you can say characteristics of the BTB. The main agenda of this video is the tax history. So I again tell you, you must prepare these tax history before going for your interview. Okay, best of luck. If you like this video, please tell me.